If you look at the markets now, we think markets are in consolidation mode. The upside is capped by uncertainty associated with Trump. You have European political risk lingering. Obviously, there is a geopolitical risk. The downside was previously capped by economic momentum that was very strong. But even that looks to be peaking. Economic growth appears to be peaking. It's as good as it can get. And there are signs that economic growth is going to moderate. So in this environment, it's very important that investors stay very cautious. Markets are in a range-bound situation. So we want to be cautious on equities. You don't want to aggressively add equity position, but you want to stay invested at the same time.
What sort of signs, when you're talking about the fact that there are signs that the economy is going to slow down or potentially taper off at these levels, what sort of signs are you seeing?
I think when we look at the confidence indicators, that has been extremely optimistic.
But in the US, sorry?
Generally in the US, but also across markets, Asia as well. So there are signs that there's going to be some tapering of economic growth. It's just moderation, but really it's not a big sharp slowdown because we see it being peak for many of the indicators that we're watching right now.
Okay, we're at the peak now. Bernie, come on in here.
So, James, what happens? I mean, what starts tumbling in Asia first? I mean, you know, for all the Trump trade and all the hopes of fixing what Trump perceives as a trade imbalance problem with so many countries, a lot of Asia still earns its day's pay by selling into the U.S. economy. That's a fact of life.
I think you have to really think that I think markets are really in a consolidation mode. Asian markets being a higher beta market would inevitably be more volatile. We have seen recently in terms of a trade, anti-trade risk, I think that has kind of backed off slightly after the meetings. But nevertheless, I think investors still have to be a bit cautious in this sort of environment. And we advocate investors to stay invested, but we want to actually rotate out of low quality equity holdings into high quality equity laggards.